One of the proven strategies to buy gold in uptrend is to look for this chart patterns. In this video, I will teach you 5 best price action patterns for gold trading. I will share with you a trading strategy for every pattern that we will discuss. All the patterns that we will discuss work perfectly on a daily, 4-hour, 1-hour and minutes time frames and can be applied for making long-term, mid-term and short-term predictions. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first powerful bullish pattern that we'll discuss is a bullish flag pattern. The pattern is based on 2 important elements, a bullish impulse and the consequent correctional movement. The highs and lows of the correctional movement should start respecting 2 parallel trend lines, one being a vertical resistance and one being a vertical support. These 2 trend lines will compose a falling parallel channel. A flag pattern trading strategy is very simple. Your strong bullish signal will be a bullish violation of the resistance of the channel and the candle close above that. After you spotted a breakout, buy the market immediately or set a buy limit order on a retest of a broken trend line. Your safe stop loss will be below the lowest low of the flag, and your initial target for the trade will be the highest high of the flag. Also remember that it is highly recommendable to close half when the market reaches the high and then apply trailing stop and anticipate a bullish continuation to higher structure levels. Look at this perfect bullish flag pattern on gold on a 4-hour time frame. After a strong bullish impulse, the market started the correctional movement within a falling parallel channel. Then the violation of the resistance of the channel and the candle close above that triggered a strong bullish rally. The variation of a bullish flag pattern is called falling wedge. In a wedge pattern, a correctional movement occurs within a contracting channel based on 2 converging trend lines. Absolutely the same strategy will be applied for trading falling wedge pattern. Our bullish signal will be a violation, a breakout of the resistance of the wedge, a candle close above that, then we buy the market aggressively, or on a retest of a broken trend line, we anticipate a bullish movement at least to the highest high of the wedge with the stop loss lying below the lowest low of the wedge. That's a very perfect falling wedge pattern that we spotted with my students on gold on a daily time frame. You can see that the bullish wave here was very strong and sharp. After its completion, the market started a correctional movement. Within the wedge, we see a clear contracting price action here, and then the violation of the resistance of the wedge and the candle close and the daily candle close above its resistance was a strong bullish signal that initiated a strong bullish movement on the market. Trading hundreds of bullish flag patterns and falling wedges on gold, I noticed that the wedge pattern has the higher accuracy. The next chart pattern for buying gold is called ascending triangle formation. After completion of a bullish impulse and the formation of a new high, the market should start a consolidation, and this consolidation should have a very specific shape. After the price reaches the high, we should see a bearish movement with the formation of a higher low. Then the market should start respecting the horizontal resistance based on the level of the current high. And based on that, the price should start setting the equal highs. And from that resistance, we should see the consequent bearish movements. And each consequent bearish movement should complete higher than the previous, so that the price sets the higher lows. That will be a very perfect ascending triangle formation. Traders, learn how to trade gold in my trading academy. Watch how I analyze and trade gold live on private live streams. Get a course teaching you my trading strategy and a book with the basics of technical analysis. For more info, check the link in the description below. A reliable bullish signal will be a violation of the horizontal resistance based on the equal highs. That resistance also will be called the neckline of the pattern. After the violation, buy the market aggressively or on a retest of a broken neckline, your target will be the next resistance and your stop loss should lie at least below the last higher low. Also note that if you trade this pattern on an hourly time frame or lower, you should set your stop loss below the lowest low of the pattern. Also remember that with the absence of historic resistances, when the market is constantly updating the new highs, your goal for the trade should be the closest psychological level, the level that is based on round numbers. That's a great example of the ascending triangle formation on gold on a daily time frame. You can see that after the violation of the neckline of the pattern, the market retested that. After the breakout, the neckline turned into support, and from that a bullish movement started. Please remember that we will say that the ascending triangle formation is completed when the price sets at least 3 equal highs and at least 3 higher lows. Please note that the partially completed ascending triangle formation will be another powerful bullish pattern. If the price sets only 2 higher lows and 2 equal highs, such a pattern will be called a cup and handle pattern. The trading strategy for a cup and handle formation will be absolutely the same as for the triangle pattern. We wait for the breakout of the neckline, then we buy the market aggressively or on a retest. We anticipate a bullish movement to the next psychological resistance, and stop loss is lying at least below the last higher low. That's a very cute cup and handle pattern that was formed on gold on the 4-hour time frame, and after the violation of its neckline, a strong bullish movement initiated. The last accurate pattern for buying gold is called a horizontal parallel channel. A parallel channel should strictly form after a bullish impulse, and the channel will signify the consolidation, indecision, and the accumulation of buying volumes. The price should strictly start setting equal highs and equal lows, respecting a horizontal support and a horizontal resistance. The principles of trading the parallel channel are very similar. Your signal to buy gold will be a bullish violation of the resistance of the channel. The candle close above that will confirm the violation, then buy gold immediately or set a buy limit order on a retest, anticipate a bullish movement to the next strong resistance, and your stop loss will lie below the lows of the pattern. That's a great example of a parallel channel that was formed after a strong bullish wave. You can see that the market spent quite a substantial period of time within that channel on a daily time frame, and then the violation of its resistance was a strong trend following bullish signal. All the chart patterns that we discussed are very powerful. Learn to recognize these patterns because it will help you a lot in predicting the next strong bullish movements. This year alone, these patterns helped me to spot a lot of great trading opportunities. Let me know, traders, in the comment section, what else do you want to learn about gold trading? Also, if you want to learn how to trade, do not forget to check my trading academy, the link in the description below. Also, traders, please watch my other videos.